All right, there we go. Everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:04 p.m. Eastern Standard Time on Wednesday, October 26, 2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's go ahead and jump right in. Take a look at what we got going on here. So obviously we have seen a little bit of volatility. We have basically seen a lot of what we've been talking about playing out very nicely so far. The real question is, will it be sticky? Will we see continuation? Essentially just what's to come. So the best way to figure out where we're going is take a look at where we came from. So let's jump right in here. So we have TNX on the daily. Obviously, we have broken down from the 8. We know the next important level is the 21. We also have the back test of the previous high right here. So it looks like we are very, very clearly headed down to about that 3.95 point. As long as we are above the 8, or I'm sorry, as long as we have the bull cross on the 821 and we are above the 21, we're still holding support. And it's not uncommon to break above a previous all-time high or cycle high and then come back down, back test it. And that's building constructive price action. What you don't want to see, what's not sticky, is when things just jump to the upside because they're not building that foundation that everything else can be built on top of. So oftentimes what happens is once weakness shows, once the hurricane comes through, or the earthquake starts rumbling, the foundation falls apart, and so does everything else we built on top of it. So as far as I'm concerned on TNX for now, we obviously saw some clear signs of bearish divergence. That bearish divergence as of now is playing out. I will assume that the 21 will hold as support and the previous level of resistance will as well until we see otherwise. It's worth paying attention though. We have 2 red histograms. We have lost the bullish control zone and we're very close to a bearish cross on the stochastics. So doesn't mean just because we're still bullishly postured and bullish on the overall trend that we don't have some short-term downside in the meantime. If we just zoom out here, we see obviously the key fib level lines up here at about 3.87 as well. So we have a couple of pretty close areas to be watching right here. Part of what we're seeing in markets right now is obviously some weakness in the DXY because of strength in the euro and the pound. Not as much really Canadian dollar and Japanese yen. But right now the euro and the pound have had a lot of negative news priced in. And, now with some changes for the PM, Rishi Sunak coming in, maybe we'll see it strengthen a little bit. It's interesting, though, if we take a look at the pound compared to the euro. And actually, while the pound has gained back some of its lost ground recently, we do see that the pound is basically entering into a bear market, or the euro is basically entering into a bull market in relation to the pound. So we know what kind of condition Europe is in. Not great, not a great outlook short to mid-term with energy, land wars, and all that stuff. And we can see the British pound looks like it's essentially starting a bear market trend in relation. So obviously that tells us, hey, we're seeing some short-term strength in the pound, but when that fades, in relation to the euro or the dollar, how does that reflect? And that's what we're going to be looking for. So let's take a look at oil right here. So we did see, obviously, anytime we see weakness in what's been trending, and then we see some strength somewhere else, we want to look because obviously we know that the money flows somewhere. There's always money flowing. It's a matter of where things are interesting at and where the next trend is going to be. And that trend might last a couple days, couple weeks, couple months, couple quarters, couple years, couple decades. We don't know, but that's what we're looking for, and that's why we're looking at these different time frames. So when I look here at US oil, I'm still seeing a series of lower highs and lower lows. Now, the only thing is we do see a bull cross right here after putting in a higher low. So while we're still very clearly in a downtrend, we have very clearly gotten rejected by resistance by the 200s, and we're very, very close to confirming the 200 simple is basically flat. When that flips red, we will be in a bear market confirmation. So the real question is, from there, can we continue to the upside, or is this going to roll over and get rejected? So, and obviously that's the battle that's taking place in the markets. Nobody knows for sure what's going to happen. We can only just look at the breadcrumbs, look at the clues. We're trying to build some momentum. We back tested resistance and then we put in a higher low. So shorter term, when we look at just this little hunk of price action right here, these last couple weeks, looks okay and seems likely that we would head up to backtest the 200 simple. So it seems likely that oil, US oil, WTI crude is going to head up to about 98, 99, retest that 100 level. If we take out this peak right here, people are going to get excited because we will have put in, a higher high after putting in a higher low. So we'll have a low, then we'll have a high, then we'll have a higher low, then we'll potentially have a higher high above this. If we get above that, then they'll get real excited because we'll be taking out this previous high right here. And then we'll see a similar type move of, what's going on in Bitcoin potentially. Where the second we do finally break through some key resistance levels, we can get a little burst of positivity. The real question is it sustainable? Is it going to change the trend and reverse it? Or is it just a, bear market rally or reflex rally, reaction rally, etc.? And I'm always going to give favor to the trend. So here we have the VIX. So VIX obviously is basically backtesting some key support levels. It was strange, honestly, to see the VIX breaking down and closing at its lows while we saw the stock market coming off substantially from its daily highs. You would think that you would see a little bit of strength in the VIX as the selling was coming in the stock market. But that just was not the case. So clearly we're seeing that the downside protection, at least for the S&P, not nearly as enticing as you would think. So we shall see how it all plays out. But still implying a roughly like 1.75% move on the daily. So pretty insane. Going out like 30 days, obviously. So VIX overall, still, it's getting towards the bottom of the range. I wouldn't get too worried about it until it gets down below like the 25 level. If it starts breaking down below the 25 level, we could see a reversion to, the heart line, a back test of some of these low levels, possibly even come down here and retest the lows again. And that would mean likely things weren't that bad, maybe soft landing. The economy's not in such rough shape, and then we just keep going from there. Now, is that going to happen? That's up to you to decide. Dow Jones. So we basically have been operating inside of this descending, broadening wedge. We have I'm going to turn off the drawing tools. We have our 200 exponential and simple here. We're clearly in a bear market. We have a series of lower highs and, of course, a series of lower lows, clearly in a bear market, clearly in a downtrend. We broke above the red slope line, the zero line, and we have all green histograms. We left the bearish control zone. We got a hard buy signal, and we're now inside of the bullish control zone. And we got an almost perfect backtest of a 200 exponential. So literally everything we said was going to happen, happened. We've been watching this bullish divergence take place right here and expecting some kind of burst to the upside off of it. And now we're seeing it play out in real time. The real question is not, was this going to be the move? That was obviously very clear. The real question is, are we going to get follow through? Can we break above the descending resistance? And we see on crypto on the 4 hour, we've already done that. On the daily, we have the 821 cross. We're still well off of the back test. So is it possible that actually crypto, Bitcoin, could be setting up for a massive rally up to retest the 200 exponential and simple? Yeah, it definitely is. It's definitely possible. It is definitely possible. Is it possible it gets rejected and now it's going to break down to new lows? That is also very much possible. So when I look at the Dow Jones here, when I turn back on these drawing tools and we see we came down perfectly the first time to our blue box, got the back test exactly to our red box, came down here perfectly to our green box, front ran the 382 slightly, and then bounce back up here to where our red box would be. If I was, not as lazy, I guess, I would have another one right here. That was obviously our target. So we'll see what happens now. We have the descending resistance. We have the 200 exponential and simple on the daily. If we get rejected right here and it rolls back over, we could see obviously new lows. We could see a higher low. Lots of things could happen right here. It's just a matter of taking a look and letting some of this price action play out. When I look at the longer term time frames though, still does not look good. We're starting to see some signs of life from these markets. So let's just take a closer look here. So if we look at our stochastics, we see here's our low on the blue. Here's our low on the blue. We do have a lower low, but we have a higher low on the knife. So we do see a little bit of divergence on the knife, not enough to really go by on its own. But here, if we look at the histogram on the weekly, we see a low right here, and then we see a higher low. We now have 2 green histograms. So at the end of the week, this will print a second green histogram and bullish divergence. Very clear weekly bullish divergence. And it has led to a very nice move right here. We talked about how it was potentially building, what it would look like if it failed, and potentially what could happen. Now, the real thing we got to pay attention to here is first time we backtested the weekly, it got rejected. Second time we backtested the weekly, we actually crossed and then it rolled over, so it flipped across. And now here we are trying to cross back to the upside, getting back on top of the 200 exponential and simple. So is it possible that that was it and we're done? It really is. It's definitely possible that the bottom is in. It is definitely a possibility. It's always a possibility that we don't go lower. Now, is it probable? There's no signs yet. Not on a daily, not on a weekly, not on a monthly. No signs of a bottom yet. We do see, I would rather see this as a bullish engulfing candle, but I treat it as one anyway. The difference being that technically we shouldn't like gap up and then engulf the candle. But again, what is this really? It's just a back test. We talked about the back test of the previous level of support. We blew through that support and now we made it all the way back up to 821. We know the 821 are bearishly crossed on the monthly. That's bad. That's very, very bad. So if we can reclaim that level, if we can close the monthly back above here, and we can start moving back to the upside. I mean, if we get a monthly 821 bull cross back to the upside, it could fail. But, I mean, we have to respect that signal. Have to respect it. So, I know I keep it super mechanical, and people don't like when I flip and I go from bearish to bullish. But, when the charts tell you to be bullish, got to be bullish. Charts tell you to be bearish, got to be bearish. Otherwise, why use technical analysis? Why not just wing it? What is wing it? I'll just do whatever feels right. I'll use my heart to make my decisions. SPY on the daily, definitely seeing some serious underperformance in the spot. So why is the Dow Jones bursting back to the upside and already back testing the 200 exponential and simple, and the SPY is pathetically trailing behind? I don't know. I mean, could be anything. A couple of the big names in there. There's a lot of factors that go into it. The levels, the industrial versus, obviously SPY has a heavier tech, and we're seeing tech earnings affect some of those stocks while a lot of other things rip. Definitely got a lot of good reasons why it could be happening. But here on the weekly, we see again the bullish divergence. We see it playing out, bouncing the 200 exponential and simple, bouncing the 382, likely to backtest the 236, the weekly 821 attempt to cross back to the upside. Basically, exactly what we said on the Dow Jones, just slightly different. And then, of course, here, again, we don't see quite that bullishness. We still have pretty aggressive slope on the 821. It is still very much bear cross, and we're still quite a ways off of that level. Now, it's only another $15. I mean, we could hit that tomorrow with the implied volatility. Very, very bearish, though, longer term. I mean, it's good that we're back testing. It's good that we're trying to reclaim some key levels, but we just printed a big bearish monthly candle. We've been essentially having every other candle, bull, bear, bear, bull, bear, bull, bear, bull, bear, bear, bull. So what's probably coming next? Probably bear. Now, maybe if we print 2 green months in a row, if we reclaim the 821, we can get excited about it, but it just seems too early to get excited. And the truth is, we're going to actually take a look here in a little bit on like Amazon and some of these recent misses as we get towards the end. And I just want to talk a little bit about it. We talked about a while ago. People forget about stuff. It's exciting to talk about, like, whatever the buzzwords are, like the next cool topic. And then obviously, once everybody gets off the bandwagon, they forget about all of this important stuff. So we're going to go back. We're going to rehash the important stuff we were talking about before it was popular. Then it got popular. And now nobody's talking about it again. And we're going to talk about that. We're going to break it down. And we're going to talk about, essentially, the compression that's about to take place as earnings are coming way down. And we're about to see that reflected in the, it's already reflected partially in like the trailing 12 months. And we can look at individual quarters, but when we have the full data for the year of 2022, depending obviously if it's calendar year or fiscal year, depending on what we're looking at. But once we have the full data for 2022, and we just got our Q3 data earnings on a lot of these stocks, some coming in today, some coming in tomorrow as well. It's going to change the scope a lot because we have important stocks in the market right now trading at like 100 times earnings, and suddenly we might see, oh, hang on, earnings are down 35% from last year. So if you're trading at 100 times earnings and then your earnings drop by 35%, suddenly you're trading at, depending exactly on the math, but you're trading somewhere in between, 140, 150 X instead of 100X. And 100X is already ridiculous. So anyway, we'll get into that in a minute. Qs just made me think of that. So triple Qs, NASDAQ, very, very weak. Very, 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 very weak. Did not even get the bull 821 cross to the upside. So why is tech so disgusting right now? Why is it such trash? Lack of earnings, obviously. Not just the misses, but the fact that there's so many unprofitable companies. Not necessarily just in the index, but in the space in general. Just kind of drags everything down. We are trying to pick up a little momentum. We are trying to get that 821 cross. We likely do hold that level and do get it in time. At which point in time, maybe we get a strong move up here to like 310. But when we look at the NASDAQ chart right here, or the Qs, does this look bullish? The Dow Jones doesn't look bad. The Dow Jones is up here trying to threaten the trend. The Dow Jones is trying to, reclaim some key levels. NASDAQ, looks like a dying breed. It looks like it's going out of business. Does that stay? Or is it just going to all of a sudden surge and catch up? Again, that's up to you. But the NASDAQ's telling us something. That SPY is telling us something. Or S&P. Let's see the Russell here in a second as well. And see if we're, see who's lying. Or who's, exaggerating a little bit. Maybe they're not lying. Maybe they're just embellishing the recent price action slightly. One major index is not like the others. So here on the weekly, again, trying to reclaim the 200 exponential and simple, still underneath 3 out of the 4 moving averages. Barely, barely, barely on top of the 200 simple. And, that could easily get lost by tomorrow. Still in the bearish control zone. We do see, we're basically the end of the week prints. We have 2 green histograms. There's no denying. That's bullish divergence. Now, can it always fail and roll over? Sure. But, we're definitely seeing. We saw signs of bullish divergence early. We talked about how we were at key levels. The 0.5 or the 382 or the 200s or some other extremely important levels, pre-Rona highs, depending on the asset, and how we were likely to get our next reaction rally. We talked about the timing. We talked about the probability of end of year. We talked about things that are strong, staying strong, and things that are weak, getting weaker as people are tax loss harvesting. All of it's playing out very nicely right now. So let's see what happens here in the next couple of days as we print this monthly. And that's really going to show us what's coming for the rest of the year. So again, very, very, very weak on the triple Qs. All we did was backtest the previous low. We're still well off the 821. This has been crossed well in advance, and it's now posturing even more to the downside. So we're seeing the moving averages not get closer to each other. They're getting further away from each other, so they're diverging, aka the trend is strengthening to the downside on the monthly. That is not good. That's not the bottom's in. No. We want to see either a V bottom, and by the time we recover, people are blindsided, and we're already up, 50%, or we want to see a rolling bottom or a rounding bottom where we basically put in a low and then just kind of hang out and around that low and just kind of slowly start putting in higher highs and higher lows, similar to what we're starting to see on crypto, which we'll talk a little bit more about that shortly. So monthly chart here on the NASDAQ, not looking good. Bearish control zone, all red histograms, red slope line, pathetic price action. All right, so now on to the Russell. So the Russell have been staying strong. Everybody's talking about how the Russell is going to lead us out of the bear market. It has not put in a lower low right here. Therefore, the Russell is the best. Therefore, small cap trash stocks are the way to go, according to mainstream media. Is that true? No. In my opinion, no, it's not true at all. The small cap trash stocks have led us out of, bear markets or times of economic contraction, due to growth and whatnot. Also, though, we're not tightening normally going into a recession. So even if we do pivot, if we pivot, it's because we're going into a recession. So now we're in a recession, so stocks are shitty. If we don't pivot, we end up going into a recession and stocks are shitty. So if somebody could explain to me the good thing that happens, that stocks are good, the only thing I could figure is the U.S. is just absolutely amazing. Everything's great. We're just killing it. Biden's got his ice cream cone. The economy's strong. It's so fucking strong. He's just worried about other countries. He doesn't give a shit. America's kicking ass and taking names. We're the fucking man. But that being, but that being said, put all that aside, we might still have to pivot because the rest of the world is so weak. They just can't get it together. So maybe that's the scenario. Maybe the Fed pivots because we just feel sorry for everybody else. We're hurting all of our allies. And then, we just have rampant inflation running wild throughout the United States. And then, of course, the United States being the world reserve currency. Well, what is part of our job as a world reserve currency? Well, we export currency to the rest of the world. The rest of the world needs dollars so they can buy their gas, they can buy their stuff. Okay, so we export those dollars. We give them liquidity. Well, what goes along with those dollars? Inflation. We give away our inflation. So sure, we still feel some inflation here, but there's a reason everybody else or a lot of other countries feeling much, much worse inflation. So that being said, we decide we're going to pivot to help out the world. And then what really ends up happening? Well, we just have inflation run wild, and then we just export that inflation to all the other countries, and then inflation's running even more wild there. And now there's nothing to do about it because we already pivoted. So if somebody could explain to me the scenario where that works out and everything's good and there's not, degradation of the human race as a whole, because we pivoted and inflation's running out of control. If somebody could just explain that to me, by all means, I'll adjust my view, but I just don't see it. I cannot right now fathom, and it doesn't mean it's not possible. I can't fathom a scenario where, they get out of this without big trouble or, entrenched inflation. And I'm not talking about like entrenched for a couple of years at like 5%. I'm talking about the type of shit that scars people for decades. They're saving like old yogurt containers, treating it like Tupperware, with $1 million in the bank because they're mentally used to just, I don't know what the word is for it. I don't want to say like hoarding, but, being resourceful, coming out of recessions, depressions, economic hardships, people behave differently. And the problem with that entrenched behavior is that, it typically sticks with people for literally generations, decades, lifetimes. And that is what we need to avoid. Which is why people are like, oh, it's just some inflation. Who cares if people are making more money? The wages, who cares? People are better off. Look at the bottom 10%. I mean, sure, okay, fine. Let's just, if you're okay with just every year, everything costing 20% more than it did the year before and something substantially more, then okay, sure, maybe we'll just pivot and print money and who cares? I don't think that's likely, but that's my opinion. So IWM is next. Obviously, looking pretty weak. We did get the 821 cross. We look like we have at least a temporary rejection candle. I don't get too excited about just a single candle, but after a candle, we look for a candlestick pattern. After a candlestick pattern, we can start looking for a little bit more, important price action. Still a ways off the 8 and 21. That would be our target to the upside, 187. Still another $8 up here. When we look at the weekly now, again, we talked about these lows and how the Russell essentially on the daily, it didn't put in a new low. On the weekly, it's basically a double bottom. Technically, I think the wick came down slightly lower. But as far as I'm concerned, this looks like a double bottom for now. We don't see the same. Well, we see it in the TDMACD because we basically have a low here and then we have a higher low here, but we have the same low on price action. So that is technically bullish divergence. So here it looks like essentially if we can break above the 200 exponential and simple, get back above them, or like to get the 821 cross, and then realistically, 195 is the target. So again, we talk about some of the macro headwinds and everything, but we also talk about the potential targets and what that's going to look like on our longer time frames when and if we start to confirm these things. And we're going to talk about the steps again as we go through Bitcoin on the 4-hour and daily charts, and some of the price action that recently played out. So monthly IWM, again, looks terrible on the monthly, lower low, bearish control zone, all red histograms. So monthly charts still looking just absolutely atrocious, just disgusting on these major indexes. Weekly showing signs of potential bullish divergence, arguably playing out as we sit here right now. Dailies using up a lot of energy to not go real far. So XLE energy surging. Obviously, we know this is where a lot of the capital is going. People are convinced, with this higher low right here, especially after taking out this previous lower high, that we're headed back up here to the highs and new all-time highs, cycle highs at least. I'm not convinced that that's wrong. The truth is, oil doesn't look particularly bullish, but a lot of the other energy stuff looks pretty good. And obviously, when you talk about XLE, you're not just talking about oil prices. You're talking about profitability of these companies. And, for a lot of these companies, a lot of the world operating at, $30 and $40 barrels of oil for a long time now, selling oil for $80 is a pretty fucking good deal. And you know what? If oil goes down to 60, they're still going to be making pretty damn good money. So it's definitely possible we see, oil or energy prices pulling off, even potentially utilities, but we still see a surge in these producers, anybody business-wise involved, but not directly 100% just oil prices itself. There's so much more factors going into a company in a space than there is just going into the asset in that space. So in my opinion, XLE, I mean, we're at the highs now. So we either go higher and put in a new cycle higher, or we don't. I mean, that's it. Obviously, this was the key level to break through. We talked about that quite a few times previously. But the most important thing is once we put in this higher low, once we reclaim the 200 exponential and simple, we know probability, even though the 200 simple is on top right now, we know probability tells us the trend is weakening. We're likely topping out. But before that happens, this 200 simple on top of the 200 exponential tells us there's a really good probability we put in a new cycle high and then we get rejected and rolls over. Does that have to happen? No. Does it line up with what we're seeing on our, tools down here? Well, I mean, we're in the bullish control zone pretty much at or around where we top out every other time we top out. Right about to potentially put in a new high and the 200 simples on top. I mean, it seems really likely that this is getting ready to top out, in my opinion. Does not have to be the case at all. XTN transportation, very, very weak. Still very much near the lows, well off the 200 exponential and simple. No big surprise here, obviously, especially with what we've seen from some of these transport companies. Airlines overall spinning a pretty rosy picture. But let's be real right now. We know that, quote unquote, revenge spending or revenge travel is a thing. If I ground you, if you're my kid and you do something bad and I ground you for, a week and then you're not grounded anymore, are you going to just hang out at the house now that you're not grounded anymore? Or are you going to fucking go do any possible thing ever? I mean, kids when they're grounded can't leave the house for anything but, chores or school or whatever. They'll literally be ready to mow the lawn or get the newspaper just to get out of the house, just to have a reason. So, in my opinion, all the travel, all the extra spending, the same, like the shift between goods and services, I think it was just basically like an overshoot. Do I think these airlines are going to be charging ridiculous prices for, flights going into the future? No, I do not. I do not. We'll see what happens though. Maybe I'll be wrong. There'd probably be a big divide where tickets are cheap again on the low side and more expensive if you want first class because, obviously those that are doing well will continue to do even better. And, those that are doing shitty will probably not be on an airplane anyway. So, SMH semiconductors. So, again, back test of previous support acting as resistance. Still a little ways off the 821 cross. Fighting down here, trying to build some kind of divergence. We see like a tiny bit on the daily. Does not look particularly great. The reason these are so important to me is, and you're like, oh, well, we can't be topping out because you just said XLE could put in new highs. Okay, let's talk about we talk about the four horsemen all the time. It's no big surprise. Obviously, semiconductors, one of them. This looks very, very weak. I mean, there's nobody right now thinking, hey, this semiconductor ETF looks like it's getting ready to break back up, reclaim the 200s, and then start back off into a bull trend. Things are looking pretty good. No one is thinking that right now at all. So this is a massive warning sign. This has literally warned us before, many, many events, including 2000, including 2008, including 2000 and a couple times along the way, but Rona as well. And it's warning us now. It's warning us very, very clearly right now. Hey, they don't need us anymore. We topped. The cycle's over. And then again with transportation, same thing. Blowing the whistle the same time. Same exact thing. And then yields, well, obviously we know yields are screaming. Something's going on. We're at new highs. We're inverted. Obviously those three things have warned us before many, many, many crashes or downturns. But the one thing that only ever warns us when there's a macro massive event, those really, really big downturns, is energy prices. And what do energy prices do? Right before the dump, they spike. And people are like, well, this was a spike. So now we're about to put in a new high, so the spike's over. I beg to differ. I don't necessarily think the spike's over. A lot of times you spike, come back down, it looks like it's over, and then you spike to new highs. Might even just get a stop hunt and just this thing surges. So we'll see. You don't want to be on the wrong side of this one, in my opinion. Especially as, I'm going to tell you right now, anybody that's ever been through a bear market, this is not what the bottom of a bear market feels like. Everybody is not saying, let's buy the dip in a bear market. I mean, I'll always take the bet against the majority. If everybody's thinking the lows are in and we're going to get a Santa Claus rally and this is the big one, I'm taking profits. Let's be real. You guys know me. XLU still below the long-term channel. Not really, people are not really searching for safety right now. Obviously this was a massive downturn right here. It's trying to build some strength back up. But I mean, what is it really doing? Well, we hit support. It's back testing resistance. This ascending green support line likely gets retested, possibly even the fib, possibly even the 200s. I don't think we get up that high in the short term, but it's possible we have a 10% rally, reclaim some key levels, try to hold on, and then either surge back to the upside or it breaks and goes down. I don't like the look of this utilities chart right now. This looks really bad. And if this closes our weekly/monthly like this, it's going to look disgusting. Now, you guys know, obviously, from when we broke down from these key levels, we had the measure move of the channel taking us down to still a higher low. Now, it doesn't have to go down into the 50s, but there's definitely a possibility. And on the weekly, what do? We broke through the 200s. We're trying to reclaim them. So far, it looks okay. If the weekly closes back on top of here, consolidates, we can start testing some of these previous levels. But, I mean, that's some aggressive selling coming in. And when we look at the monthly, I mean, we're now very close to that 821 monthly, basically getting a bear cross. Now, we did get bought up fairly aggressively on that wick, which is a good sign, but we would expect that to happen at least on the first touchdown here. So, very, very clearly see the double print on the divergence signal. So we see bearish divergence. Sell by sell is great, but sell by sell, the double D, not good. Not good, okay? So what happens next? If we close below this 8 and 21 right here, and we already kind of back tested it, bots and algos are going to say, oh, shit, that's it, sell it. And now it's possible again, back test, continue the upside, but I'd be real careful. Bearish divergence here on the monthly, on XLU. We're pretty much asking to get our asses handed to us in these quote-unquote safety sectors. XLP, again, series of lower highs, series of lower lows. Started to confirm into a bear market, put in our lower high here. This is our reversion to the mean back test. So what happened? We broke down below the 200s, tried to reclaim those levels, put in a lower high, got rejected, lost key levels, went on to make lower lows. That's a textbook. That's literally what we expect every fucking time. And then the next thing that happens is the reversion to the mean, the last bullish trade, the confirmation of the bull market, which is the run back up to 200 exponential and simple, or the reversion to the mean, likely gets rejected, rolls back over, and then continues to go on to new lows. So again, series of lower highs, series of lower lows, nothing bullish right here. I think it's a decent place to, protect some wealth historically, but, doesn't necessarily have to be great. Doesn't necessarily have to work the same way it has in the past. Now, I think it will, but I mean, who do you think did better at the end of the year? The guy who stayed invested in the S&P or the NASDAQ and lost, 20 or 30% of their portfolio, or the person that was in, XLP and only lost 17% of their portfolio, or the person that just sat on the sidelines and, didn't go negative. I mean, let's be real, okay? Let's be real fucking real. At the end of this year, at the end of 2022, when you look at your book, if you as a, fund manager, random retail investor, speculator, anything, just a crackhead with a phone and a dream, whatever you are, it doesn't matter. If at the end of the year, you didn't lose money this year, you are fucking awesome. You literally outperform probably 90% or more, probably 95% of people out there. So if you're sitting on some losses right now, or no losses right now, or you're about to end out this year positive, you go ahead, just take a minute and pat yourself on the fucking back, because you're the man, okay? And I assume most of you, if not all of you, are in that situation. So while everybody else is struggling, getting absolutely destroyed by these markets, we're comfortable as fuck. I mean, the only FOMO we're feeling is like, hey, maybe the bottom one day will be in and we'll have been underinvested. So like, oh my God, we had a 50% drawdown and it bounced 20% before we got back in. Oh my God, what were we thinking? Like, you're the fucking man. Pat yourself on the back. Because goddamn, we're doing it. All right, so on to the DXY. Obviously, this is the source of the weakness. We've been talking about this. No surprise. It's doing exactly what we said. We came back down. We back tested the white line right here. We are technically below it for now. This is sending support. Don't want to get too excited just yet. There's definitely some different ways you could probably draw this. I look at this more as like a zone, give or take, a candle or a day right around here. Support is fine. Could we pull back deeper to some of these previous little highs, or the key fib level, or the uh, fan? Any of those, we kind of have like a cluster of support right here. We have the 200s down here. The knife is pretty low. We did get the hard sell leading into this. We have a red histogram, all red. Our red histograms, red slope line rather. We're below the zero line. So pretty aggressive sell-off coming in here on the daily for now. No surprise, obviously. Been expecting this to cool back off. The real question is, will this sell-off be sticky? Will this continue to be reflected? Because we know what happened. We know why this is happening right now. This is not a surprise. Europe and UK were in a real shit spot. And Japan, obviously. And, Canada's not great, but basically everybody was in the middle of a shitstorm. And somewhere along that shitstorm, it looked really, really bad for the UK and the euro. And now it doesn't look quite as bad. So we're seeing, that reflected. People had overpriced the dollar in relation to those. And now they're arguably, it overshot to the upside, might overshoot a little bit to the downside. I don't think this puts the trend or any long-term timeframes in threat or anything like that. Obviously, if we start to close our weekly below the support line, if we start to close some gross weeklies below, our previous high here, or previous high and fibs right here, or the fib fan, any of those things potentially, the real target is the 21, obviously. We talked about how we haven't retested the 21 since back here. Didn't seem crazy for us to retest the 21, but we're not calling the end of the trend while we're literally on our way back down to test a weekly support. So it seems very, very likely 108 roughly is the target here, and then that's where we'll decide. That's where we'll be able to figure out what the market's really telling us. We're leaving the bullish control zone, hard sell signal, multiple red histograms on the weekly. Still above the slope line. It is still blue, still above the 21. Everything's still bullishly crossed to the upside. This seems like a legitimate backtest, a build of structure before we can go higher. So it looks good to me. How many other times do we literally say, oh, that was the top. Oh, that was the top. Oh, here's the top. Now this is the top. People are going to be calling for the top, for the next 5 years. Now here when we get to the monthly, we do have, sort of like a pincer top right here. Two kind of rejections. A pretty red candle right here. Again, 5 days left in the month here. So this could make or break. We could see a gross candle. If this closes as like a pincer kind of top rejection, bearish engulfing candle by the end of the month, and we close down below 108, we might be singing a different tune. At that point in time, we might be coming at it, the bullish control zone, potentially getting a hard sell signal. Might be showing our first red histogram, in over a year. So there's definitely possible that we could build legitimate bearish case for this. But right now, I don't see anything like alarming right here. Nothing to be worried about. Definitely worth paying attention to. Definitely what we've been expecting. But I wouldn't get too excited just yet. Or too worried, etc. So Tesla next. Obviously, Tesla's been getting wrecked. It did just put in a new low. A little backtest bounce. A little dead cat. Not particularly great. Bunch of green histograms. Hard buy signal coming out of the bearish control zone. It's hanging on for now. It's hanging on. I don't want to get overly bearish on Tesla. The cult is strong with this one. Microsoft is next. So Microsoft, technically, it was like a half beat, half miss. The 821 did bull cross. And then the rest of the earnings from the space come in, and we gap down here. And then from that gap down, we actually pushed all the way back up and then got completely rejected. So it looks like we're headed back down here to the lows. Doesn't have to happen, but I'd say 219 is probably a safe bet. We did have that bullish divergence on the daily. We got a pretty aggressive move to the upside off of that. And now it looks like we're failing to cross 821 to the upside. So if we can get back above 240, we have a real good probability of getting up to 267. But if we don't get back above 240, we're likely coming down to 220 and, lower. Series of lower highs, series of lower lows. Clear bear market. So Apple, obviously, we got a couple key earnings coming in. Apple and Meta tomorrow. So we're definitely keeping an eye out for those. That is a big deal, obviously. Saw a little bit of bearishness. We did get all the way back up to 200 exponential and simple. We did get the 821 cross right here. This could easily surge if they have a killer quarter. I'm guessing that the currency risk and, slowing economy, they make a lot of revenue off of, their app store and purchases and all that stuff. And I'm not sure that people are out there spending recklessly the same way they were on Apple products, digital products, aka the Apple Store, or ad revenue. And then on top of that, currency headwinds, and they are a global market, as global as it gets, including, I mean, we'll see. We'll see how this pans out. I think this is going to be a big one. Obviously, it's a very big part of the major indices. It did put in a higher low right here, which is a good sign. Unfortunately, we have a series of lower highs, and then we have a higher low right here. This could easily get rejected here, put in a lower low, and then what do we really have? We have a high, we have a low. Oh, look, right here. We have a high, then a low, then a lower high, then a lower low. Then we take out this high right here, and it's like, oh, that's it. We're going into all-time highs. And then everybody got trapped and looked like fools up here. Because really, this is just the breathing in and the breathing out, and then that's one move done. And then we go up here, and that's one move done. And then this is the breathing in and the breathing out, and then that's another move done. And then another move, and then this is the breathing in, and this is the breathing out, and this is the breathing in potentially to new lows. So when I look at this, I see, one move down, one move up, one move down, one move up, and then half a move down. We're still in the middle of. Does that have to be the case? No. Am I biased right now towards Apple? Of course. I told you guys know I'm short. So Google on the daily. So we did gap down for new lows right here. No surprise. I mean, it was very, very obvious. Obviously, hey, big surprise. People aren't spending as much on advertising revenue. Holy shocker. So 16% surprise on earnings and 3% surprise, obviously to the downside on revenue. So their estimate was 71 billion and they came in at 69. So they're about 2 billion short. It's a lot. It is a lot. Its market cap is 1.24 trillion currently. And when we look at the net from Q2 2022, the revenue was 69, net was 16. And then the revenue was 69 again, net was 13. So clearly, I mean, you want to see revenue expanding, but if it was 69.31 and then it went to 69.09 and the net went from 16 down to 13.9, where did the other, $2 billion go? Obviously expenses. So, right now you could say, well, it's not good that their revenue is down, but clearly the expense problem is the issue because as a percentage, they're seeing it go up, which is not good. And again, it's 67 in Q1, 69, then 69 and slightly lower. And again, net income was 16.4, 16.0, 13.9. So we're seeing a trend. The revenue is trending down since Q4 of 2021. The net income is trending down since Q4 of 2021. The profit margin is trending down since Q4 of 2021. So arguably, there's a pretty clear trend taking place right here. And it's a downtrend, on earnings. And how is that going to reflect? Well, the PE ratio right now is 20.7. Earnings per share is $5. So if earnings just came in and the estimate was $1.26 and then the actual was 106 and missed by 20 cents. Well, if the estimate going into the future in Q4 is $1.23, $1.23, and we were supposed to get $1.26, they're already guiding down lower earnings. So if we just assume the trend continues, suddenly this PE ratio is not going to be correct. Suddenly the PE ratio is going to be a lot higher than it really is. And that's, the 20. So new lows on this thing, not good. Clear rejection, gap down, miss on earnings. Very aggressive knife stab right here. Absolutely disgusting. But you guys know. I've been calling for sub $100 Google. The 0.5 down here is at 87. So is that going to happen right now? No, because the markets are closed. So Meta is next. So you guys know, look, I don't have to explain to you how much of a piece of shit I think Meta stock is and how much of a fuckboy old Zuckerberg is. But that being said, it is an important company, obviously, in the major indices. So once again, no big surprise here. Earnings wise, a miss of 13.52%. Estimate was 189, reported was 164. But surprise wise on the revenue, 27 billion was the target, and they beat it by about 1%, 274 million. Must be nice. And then again, we see revenue 33 billion in Q4 of 2021, net income 10 billion, 30%. Then from 33 down to 27, from net 10 down to net 7, from 30% margin down to 26% margin, and then from 27.9 up to 28.8. So slightly higher revenue. Net income from 7.4 up to down to 6.69. So more revenue, substantially less net income. So again, we have an issue with expenses. And then profit margin from 26 down to 23. So again, we can see a clear trend taking place here. And now on top of that, the earnings forecast and then, actual numbers, what is that? February 2022 was 367 actual, and then it was 272 actual, and then it was 246 actual, and then it was 164 actual. Oh, but don't worry, because the Q4 earnings is going to be back at $2.63. So we're in a clear downtrend. They have a clear expense issue. Very, very clearly things are pointing to the downside, and yet suddenly we're going to jump from, a 190 estimate up to a 263 estimate. Okie dokie. All right. I'm sure that was it, and it's just all back up from here. So once again, earnings compression, because right now we're only trading at 11.39 times. And, it's still high, but not nearly as high as some of its competitors or other players in the space. But it's not hard for, basically this 11.39 to suddenly jump up to 15 or 16 or, 18. If the earnings come down to where, they're likely going to be. All right. And then the last one of our little clusterfuck over here. So next we have Amazon, the final of our magma stocks. Melting down here. So Amazon has maintained a higher low. Again, we don't see that in many cases right here. And we are about to get our earnings on Amazon tomorrow. We did get the rejection and failure. Well, we crossed the 821 to the upside, and now it's getting rejected. But let's take a closer look at what's going on here in advance of our earnings coming in tomorrow. Oh, that's right. Yeah, good call. Appreciate that. I didn't even pay attention to the well, let me go through the comments real quick. I just glanced over and saw something. What's up, Toby? Good to see you. He said, hello, Crypto Trend Trader. Thought on buying Google at 200 WSMA, touch for a bounce. Yeah, I mean, reaction rally typically is going to be off of the 200s the first time you touch them, regardless. It's never a bad idea as long as you're looking at it as a potential scalp and you have some clear definable levels, but obviously not financial advice. What's up, Parag? Good to see you. Cool Sheet says, good evening, bro. We enjoy this election exit pump. Yoda says, Meta earnings today, it was, after close, minus 19%. Yeah, brutal, but not surprising, right? My bad. Give me just 1 second. Yeah, brutal, but not surprising. So what did it go down to? Down 23.52 after hours. It closed at 129. So yeah, it's about like $104, right? Brutal. So there you have it. I mean, no big surprises there. Another big tech stock that was expected to have poor earnings caved after it had poor earnings. That's nuts. I can't even believe it. So anyway, On to Amazon, because this one is really worth paying attention to. So obviously, Amazon trading at a slight premium in relation to the market with its 107.93 PE ratio. So not bad. 108 times. Not bad. I mean, it's obviously doing great, right? Let's take a look at here. Q4 2021 revenue was 137 billion. Net income was 14.3 billion. Profit margin was 10.42%. Okay, let's look at our Q1 2022. Revenue was 116 billion, so it was down about 20 billion. Wait a minute. Net income went from 14 billion positive to 3.8 billion negative. Hold the fuck up. Amazon is losing $3.8 billion in a quarter right now? Huh. It's like, and it's trading at 108 times? Huh. Super weird, right? Well, I mean, that must have been a fluke. It's definitely not been doing that since then. Oh, Q2 2022 as well? Oh, I'm sorry. So we went from 116 billion to 121 billion. We went from a net income of negative 3.8 billion to negative 2 billion. A profit margin of negative 3.3% to negative 1.67%. But it's only 3%. It's only 1.67%. Who cares if this gigantic company is losing billions of dollars? It's not important to the markets or the indices or the economy or anything like that. It's not like Amazon is like 10% of like the jobs in the fucking United States. No, none of that's important. So now that we know none of that's important, let's just look over here and just see what could be coming for Amazon. So again, if we look at the earnings, obviously coming into a little crazy Q3 2021, basically actual was 31 cents, estimate was 44 cents. Then Q4 2021 was insane. That had a lot to do with what was it, the Rivian situation and everything. Actual was 1.39, estimate was 18 cents. So you think, how could they have estimated 18 cents in earnings and then actually gotten 1.39? Again, it's because of that stake they had. So then next we see from that point. So this was the real fluke. This is an outlier. Now, typically in real life, when we see something crazy like this happen, we try to figure out, okay, why did that happen? Well, we know already. We know why it happened. And then afterwards we say, okay, so is that like likely to happen again? Or is that an outlier, a fluke, a corrupt, or much less useful data point? I would agree. Yeah, obviously. So if, we don't want to ignore this, but let's just pay attention to the miss right here in Q3 of 2021. Then Q1 of 2022, estimate was 42 cents. Actual was negative 38 cents, a miss of 190%. So horrible, horrible miss with an estimate of 42 cents. Then the estimate was 12 cents. Oh, and the actual was negative 20 cents. Another horrible miss, 266%. Negative 32 cent surprise. And now here we are for Q3 2022, about to be reported tomorrow. And we see the trend, is lower and lower and lower. Now here we did have slightly, higher earnings per share. So it's like, well, maybe it already bottomed. And you're like, what about this guy? Well, we're kind of ignoring that guy, etc. So what's likely to happen right here? Estimate 22 cents. I mean, are people buying more shit on Amazon over the last quarter? Is Amazon making more money? Are things getting better for Amazon or worse for Amazon? Did they go from losing money the last couple quarters to now suddenly they're making money? I mean, you know how I feel. I can't be more clear. So now if we look at the actual EPS, the $1.14, and then, right now we're looking at essentially trailing 12-month numbers, which means it's going to take into account our last, 4 quarters of data that we have. So obviously this is huge, because if our basic earning per share is $1.14, and this is $1.39, and then the other 3 are negative, well, we know that we're about to get another one. Let's assume that one's negative, or let's just say it's flat. We know this negative is going to roll off right here. So we're going to have the 31-cent actual earnings roll off the back right here. So right now it's trading at 108 over the trailing 12 months price to earnings ratio. And we're about to have actual 31 cents rolling off right here. So with the estimate is 22 cents. It's missed on its last couple. So let's just say it's a hit. Let's just say they nail it. Boom, 22 cents. Revenue's good. Everything's fine. So this rolls off. So the 31 cents rolls off. The 22 takes its place. And now we lose 9 cents off of the earnings per share. So now it goes from 114 down to 105. So then what happens on the other side of the ratio? The PE ratio goes up. So that's our earnings compression. The multiple compression has been taking place, but it's not necessarily affected right here. We know it's ridiculous. It's trading at 108 multiple. That doesn't have to change. But if the earnings change, which, they're likely going to, and that's just assuming that we roll off a 31 and we roll on a 22, comes right in line with everything. Let's just say we get another one of these disgusting ones, down 20 cents or down 40 cents or something like that. I mean, we could end up easily getting a negative, easily even getting a miss, or easily getting a miss, potentially getting a negative. And then all of a sudden we start looking at this and we say, oh, actually earnings per share under $1. So now suddenly the price to earnings ratio, we could see a substantial jump in this. It could easily go from 108 to like 130. And then at that point in time, it's like, well, okay, if the earnings are now adjusted to where they should be, or, are currently, and then all of a sudden the ratio is extremely elevated, well, we know the ratio needs to come back down. So if it comes back down to the 108 level again, what is that reflection going to look like in the stock price? And that's all I'm trying to build this picture in this long, drawn out way that probably nobody cares about. And I'm sure I've bored the hell out of all you guys. But the fact of the matter is the relationship between what we see happening and what's actually happening right here, the data that's publicly available and what's likely to happen going in the future. And we could be wrong. That's okay. This estimate might come in. It was 22-cent estimate and they just demolish this. Okay. And then not only does the 31-cent rolls off, but we replace that 31 with, 35, at which point in time earnings per share goes up by a few cents, at which point in time, the PE ratio goes down. Therefore, if 108 is the true value PE wise, then, we see it go up. So interesting dynamic. Hopefully this helps to understand what I think is coming here. But the real devastation that's going to take place on this piece of shit. And I love Amazon. Don't get me wrong. I use it all the time, whatever, virtue signal, etc. This is the one that's going to change the game. This quarter, sure, we roll off 31 cents, whatever. That's replaceable. What the hell is this going to do? So when this one rolls off, so this is about to roll off tomorrow, obviously, and then these are our 4 data points, and we know this one is $1.39, and the other 3 are likely negative. So then what happens at the end of Q1 2023 to Amazon's earnings? Because this will be gone, and this will be gone. So let's just say this gets replaced with the 31. It's just a flat, even money exchange right there, so nothing changes. Now let's take out this $1.39 from this quarter when this rolls off at the beginning of 2023 or the end of first quarter of 2023. And now suddenly we have, negative 38 cents, negative 20 cents. So that's negative 58 cents. And then what do we have right here? Let's say that 30 rolls in. So we're about 20 something cents negative on the year. And then our next earnings comes in and let's just say it's right in line with what they're expecting. So what? Amazon just breaks even. It goes flat for a year. That's a serious fucking thing. If they, you can't even calculate price to earnings anymore because they won't have any actual earnings because they'll be losing money for the whole year. There's people talk about, we talked about the multiple compression way in advance. And then everybody was talking about multiple compression. We nailed it. We got ahead of it. We traded it. We crushed it. Okay. Then everybody, we started talking about earnings compression was the next thing to come. And obviously other people were talking about it too. And then it went mainstream and everybody was calling for earnings coming down, earnings coming down, earnings coming down. But nobody ever talks about the trailing 12 months. Nobody ever talks about what's about to roll off of the earnings. Nobody ever talks about what it's going to look like going into the future if the multiple stays the same, but the earnings drops, how that's going to reflect in the price of the stock. And that, if you make one connection from today's stream, that's it. Matter of fact, we're just going to wrap it up there. I'm done. No, I'm just kidding. But very, very important. So we'll see what happens tomorrow with Amazon. I don't know what's going to happen, but, I got a feeling. I got a feeling. So we'll see what happens. We'll see how it plays out. I'll gladly come back on here on Friday and be like, man, I was wrong. Amazon's crushing it. They're definitely not going to be not making any money for whole years after. If I told you, hey, I got a really good business, and you're like, really? And I'm like, yeah, it's been around for like 30 years. And you're like, oh, that's good. It's established. And I'm like, yeah, market cap's huge too, like trillions. And you're like, really? And I'm like, oh yeah, we did like over, hundreds of billions of dollars in sales, tens or hundreds of thousands of employees, et cetera, et cetera. And then I say, well, yeah, but I mean, what kind of money do you make? And you're like, well, we don't actually make any money. I'm like, oh, so you're a $1 trillion company with hundreds of thousands, millions of employees, and you're doing billions, hundreds of billions of dollars in business, and you're making how much money? Well, we made money before, but we didn't make any of this last year. We're just not counting that one. Don't worry about that year. That little year right there, don't worry about that little guy. Okay, that's good. Well, I mean, at least you're probably trading at, a reasonable valuation, right? It's not over 20. Oh, it's well over 20. Are you kidding me? For a good company. Oh, it's not over 50. I mean, that's fucking insane. Oh, it's well over 50. Well, I mean, it's not over 100. Oh, it's over 100. Oh, okay. You want to invest? I mean, if you could walk down that path and get to the, hey, I think I want to buy Amazon right now, by all fucking means. I'll gladly be wrong on that one, but, and look, just because we're using numbers and reason and our brains does not mean we're going to be right. There's plenty of people that barely have a brain or don't use it at all that are right. And sometimes we're wrong. So nothing is a certainty, but I can see the probabilities are pointing towards what the fuck. All right, so let's take a look at the shitty bitty. Little crypto in the house. So we're actually going to roll on down to the 4 hour, and we're going to start right here. So we saw some very important things. Obviously, Bitcoin was unable to recapture the 4 hour multiple times in a row. It was putting in a series of lower highs and lower lows. And then finally here, we're threatening those lows. I have like some super cool channels drawn. Excuse me, and descending triangles and all that stuff, but it's on my other chart. So you just won't get to see that. But it's in the group and it's playing out really nicely. But that being said, and it's not because I'm like holding out on you guys or anything. I just don't feel like redrawing everything on here exactly how I have it. But it's been playing out really nicely. So we could put the triangle on here though. Probably worth paying attention to what we got going on here. Depending on how you're drawing this triangle, something along these lines basically had something like this going on, and then tested it, broke out, reclaimed the 200 exponential and simple, and then we saw a nice little surge after that. The knife went through the roof, obviously, all green histograms, blue slope line above the 0 line, bullish control zone, all that good stuff. We talked about the trend line on the daily. We'll look at this on the daily, actually. And then we took out, obviously taking out this high was big, this high was big, this high was big, but this was the key one. So our first target to the upside was 20,400. We got there, and then obviously consolidated for a bit and then surged above, took that one out. So now we have a confirmed technical breakout where we took out the previous high, at which point in time we start paying attention to, there's like a couple things that are not on here, including a descending channel, but also this, just sideways channel right here as well. So we have a key fib level, we have the heart line of the channel and everything coming in around like 21 to 21.4 to 21.5, something like that. We're at about 20,800 right now. Doesn't seem crazy that we would get there. We're above the 200s. The 8 and 21 are bull cross right now. So overall, this is the beginning of a bull trend. Now we're still very much in a bear market, and the price action is still very much bearish. But that being said, it's starting to build a bullish case, at least for the retest. I mean, we've gone since March of 2022 without a retest of the 200s. So it's not fucking crazy that we finally push up here and touch the 200s. Just the tip, just for a second, just to see how it feels. I'm not saying we go into a bull market. I'm not saying, Bitcoin is bullish after that. I'm saying we just come up here and back test the top of the channel, the 200 exponential and simple. And then after that, we can play by ear. That's roughly around 24.4 to 24.7, somewhere around there. We have that clear yellow descending resistance. We have a 200 exponential and simple. We have a top of the channel. We have a bunch of other shit that we could draw into if we wanted to, put a swing high from the 2 to the bottom right here. We could put one from the top right here to the bottom right there. But essentially all we're doing right now is testing some key levels. So what we want to see obviously is a back test, and from our cycle high right here to our recent low right there, or lowest low so far. And then we want to see it hit the 236. Once we hit the 236, that confirms, potentially that the bottom is in. So that already took place. Then we come down here, retested the lows, put in a slightly higher low. So there's an argument to be made, or a case to be made, that we're building, a bottom, at least temporarily right now. So realistically, we hung out at the lows for this whole entire time. It seems like we're going to come up here and test the highs. Retest the 236, retest the top of the channel, retest the 200 exponential and simple, retest the descending resistance line. So that's my target, is, basically 24.3 to 24.5, something like that, roughly in this range. We'll see what happens. Doesn't have to get there. Could easily just surge and just explode to the upside after that, and just immediately just go straight to a gazillion dollars. Anything's possible. Anything is possible. I could very easily have already topped out and it just rolls over and dies right now, starting now. We'll have to see. Here on the TDMACD, or I'm sorry, the Jewel Thief stochastics of bounce the support line, and now here we are once again bouncing the support line. So that's what we were discussing. We have a high, a higher high, and a higher high again on the knife. We are at a very, very elevated position on the knife. As long as we're still above this trend line, and I don't draw a ton of trend lines on indicator oscillators, but it doesn't mean they're not useful. Just usually somebody else telling us the same thing. As long as that's holding, that's technically good. So we'll keep an eye out for that. We'll see what happens with this situation here. We don't want to get greedy in our positions. We're going to look at the relationship between that shitcoin and other shitcoins. I mean, Bitcoin and other shitcoins. I mean, Bitcoin and the shitcoins. We are still at the bottom of that range here, the ascending green rounded channel. We basically came down and touched it right here. So again, we will bounce back up, a retest of descending resistance, and then likely a push back down. But we'll see what happens at that point in time. It is worth noting on the weekly, we did put in a lower low. Could that be a spring and we shoot to the upside? It's possible. Typically, a spring has a pretty strong rejection affiliated with it. All green histograms were at the red slope line. So we break above this, we retest to 0, potentially flip the slope blue, start building weekly momentum to the upside. If we get rejected here, it is technically resistance. That would make sense too. Definitely a possibility. Closing this weekly above the 8 is a big deal. Now, the last couple times we got rejected, getting up here to retest the 21 or the 200 simple would be huge. Again, somewhere around 24 to 26,000. Seems viable right now. Don't want to get overly bullish. We are attempting to, basically exit the bearish control zone and get a hard buy signal. Keep in mind, we have a Fed meeting, a week away at this point in time too. At which point in time, I expect no pivot, 75 basis point hike, and honestly, I think Jay Powell's been pretty straight up. I don't think he's going to come out. And here's the thing about Jay Powell and what he was been doing this year that hasn't worked, and then he stopped doing it. Okay, he was coming out, and he was basically like an abusive spouse. Okay, and this is probably a bad analogy. So if you have an abusive spouse, don't listen to this because I don't want you getting all emotional shit. But think about Jay Powell as this abusive spouse. Okay, you're just just a nice person, and you just love this person, and you just trust them and believe them and listen to them. And they keep coming out and telling you how much they love you while they're beating the shit out of you. He's like, don't make me do this to you. Market goes down 1,000 points. That's what's going on. Jay Powell has been coming out and beating the shit out of the markets, 75 basis point hike after hike after hike. And then he would be like, but, hey, it's not so bad, and this, that, and the other. He stopped doing that after Jackson Hole. At Jackson Hole, he came out and said, look, we're not going to pivot. I'm not a dove. We're going to fight inflation. We're going to cause pain. And then he reiterated that again afterwards and said, we still feel the same way we felt at Jackson Hole. And now he's not doing that anymore, okay? he's still beating the shit out of the markets. I mean, not us. I mean, we're the spouse in this example, but obviously we're just dodging these little fucking decrepit punches from this little cuck loser boy. Yeah, he can't touch us. I'll fucking punch him in his mouth if I ever saw him. Not literally, metaphorically speaking, obviously. But that being said, it's the same example. The difference is now he's still beating the shit out of his spouse. He's still beating the shit out of the market. He's just not telling it he loves it anymore. He's not telling it that it's for its own good. So now he's at least not sending mixed messages. And that's what it's really all about. If Powell comes out, sends a mixed message again, sure, maybe the market surge. If he comes out, hikes rates again, 75 basis points, and they don't really give any guidance, which I'm not expecting, that's not any better. We're just 75 points further into rate hikes with no end in sight. And you're like, well, yeah, but they can only do so many. Sure. And that's what the market's counting on. On the monthly here, Bitcoin, terrible. We just put in a new low. We are bullishly engulfing that previous monthly candle, which is good. Still in the bearish control zone, below zero line, all red histograms, red slope line, well below the 8 and 21. Still clearly they are, the gap between them is widening. They are diverging. They're getting further away from each other. The trend is strengthening to the downside. Now the difference is it had one big drop or a series of big candles down and then consolidated. So it's like, well, we're not strengthening to the downside. We're barely even going down. Well, sure, that's what the consolidation is. It's the sideways action before the burst to the upside or the next leg down. And obviously my bias is to the downside, especially with the pathetic performance of crypto. Nice in the last 2 days. But how many times have we got a 2-day rally followed by new lows? Or, one big candle followed by one other big candle back in the other direction. Here's 2 big candles, a bunch of sell-off. 2 big candles, bunch of sell-off. 2 or 3 big candles, bunch of sell-off. So, this doesn't excite me. I'm not like, oh, this is it. We're going to go back to the upside. I see the 4 hours trending back to the upside. Once the 4 hours above the 200s and the 8 and 21 across and, everything's bullish on the 4 hour, we enter part of a position, etc. And then we look for it to develop on the longer time frames as well. So Ethereum, so we have talked about this a gazillion times. No big surprise. Nothing has changed here. Obviously, my base case was the 5 waves already played out. But there was this green case as well, which is that this is a 3 and this is a 4. This is our retracement. And then, we're going to go higher off that. The key to that was that we never on a daily or longer time frame closed a candle below 1,238, which we did not. Here we closed at it. We did not overlap below the 1. So this is still likely, possibly, potentially the bottom of the 4. And now we're headed back up here for the 5. And the 5 target, potentially for Ethereum, 2,500. So another $1,000 in the tank for Ethereum. Definitely a possibility. Now, could it get rejected here or here and then just roll over and it's a lower high and it was just a fake out lower high and realistically we're actually just 1, 2, 3, 4 and then, here's our 5? Definitely. But it's just as viable that this is actually going to end up being the 4. And we have talked about this the same way. The top of the 1 here and the bottom of the 4 here can't overlap. That's a rule. The bottom of the 1 right here and the top of the 4 can't overlap. That's a rule. So our peak basically viable on a daily candle close is like 24,000, 2,400. You're like 24,000. I'm all in on ETH. 2,400. I'm sorry. So that's what we pay attention for. So should this be just like slightly lower? Probably just like an itty bitty bit lower. But regardless, you guys see what the picture is, and we had 3 different paths. A couple of them led us to glory and some of them led us a lot closer to zero. We're still following 2 of those paths right now. One of them is no longer viable. So we'll see what happens. We will see what happens. Ethereum looking much stronger than Bitcoin though, substantially off of the lows. All right, so let's look at the total crypto market crap on the weekly. Bunch of green histograms, that's good. Hard sell, not so great. The knife is on top of the stochastics, that's good. We're below most of it. Well, we're in between most of our moving averages. As far as I'm concerned now, 900, well, I said this before. Once we reclaim 924 billion, which we did, the resistance is 1.056 trillion. So as long as we're in between these moving averages, we're just range bound. We spend a little time below the range here. We spend a little time above the range here. As far as I'm concerned, we are just range bound. There's no new money in the space. There's no new value being created. It's literally just money moving around, or, you know, market cap valuations being inflated. But there's no money coming in. There's nobody investing in cryptos. There's no new excitement. There's not, you know, an ETF on the horizon or whatever the fuck people are talking about. It's all bullshit. It would be reflected here, right here. It would be reflected here in the total market cap. That's not what we're seeing. We're seeing the money shift around, and some things are pumping and other things aren't. You know, an interesting thing that we've been discussing also was once that dollar weakness showed up, which it did, and, you know, we've been expecting it. You know, shout out to one of the group members in particular for kind of pointing out the what ifs in advance for if a dollar was topping. So mad props to you, brother. You know who you are. But we were talking about the hypothetical in advance, you know, not to get too excited, but what it would look like. And now that's playing out beautifully. Well, how is that reflected in the Bitcoin dominance chart? Because we know that a lot of people were speculating on DXY or USD dollars outside of the United States through digital cryptocurrencies, aka stablecoins. So here on our total market cap on the weekly, we're back at the lows, looking like a pretty clear rejection. So Bitcoin was gaining a little bit of strength, but it's basically at the weakest it's been in years compared to all the other cryptos. Shitcoins, awesome projects that are alternative coins, aka altcoins, as well as stable coins, including, you know, scams like Tether. So that being said, this tells us essentially, hey, Bitcoin gained a little bit, but it's still trash. Nobody cares about Bitcoin. Nobody wants Bitcoin. They would rather have some trash stablecoin or some trash other crypto. Bitcoin is garbage, according to the chart, not me. Hard buy signal coming out of the bearish control zone. Couple green histograms trying to recapture this level, technically above the slope line. Coming up on the zero here shortly. If it can build some strength. It was close to building the 821, close to getting it crossed back to the upside. But now we're seeing some weakness come in. Does it continue to the upside and gain strength? It probably does. It probably takes a little market cap. So is that going to be Bitcoin going up and the alts underperforming? Is that going to be money coming out of stable coins into Bitcoin and altcoins, but into Bitcoin faster? I don't know. I don't know which one it'll be. Or the opposite. Everything could go down and Bitcoin holds up better. So let's look at this one without the stable coins and see what this tells us. So we're substantially off the lows right here. So when we took out the stable coins, the picture became much more clear. The picture tells us, hey, actually, a lot more people are in Bitcoin relative to altcoins now than they were a couple months ago, you know, at the beginning of the year, basically. So more people are in Bitcoin as opposed to altcoins. So that's typically a risk-off environment. Because in risk-on, people want the shittiest coins that are the cheapest price that have the most potential percentage gains. When people are scared, they stop speculating on, you know, Dogecoin and Cumrocket and, you know, whatever scam coin, you know, and they put it back into like Bitcoin or stable coins. So when we take out the stable coins and the dollar speculation, and the chart basically tells us, hey, you know, more people are in Bitcoin right now and it's trending to the upside, putting in, you know, a series of triple bottoms followed by higher lows. So as long as we continue to put in higher lows, it tells us probably we're still in a risk-off environment. You know, because I would argue this has been a pretty risk-off environment. You know, if you were in shit coins, you probably lost more money than you did if you were in Bitcoin. Not a great way to... I think we had it like this. Sorry, I think it was drawn on the other one maybe. I don't know. But as long as we don't lose this previous low right here, I think that's important. You know, so as long as we're putting in a higher low. So the next one we'll look at is if we come down to that like 46.69, and then after that 44.75 or whatever. But essentially, this looks much more promising if you're a Bitcoin fan than if you're a shitcoin fan. But either way, when we look at the total market cap and we look at what's happening with the dollar right now, you know, none of it paints a pretty picture, in my opinion. Again, it doesn't mean we have to like go to zero and just all these things crash. Doesn't mean we can't go to like 25K. It just means there's nothing like macro changing so far from our price action. But we're showing some signs, which is good. So gold still looking pretty pathetic, hanging out at the lows. We did get a nice little bounce, like $40 up right here. Very, very likely we come up to like 1700 and backtest that. That is a strong, what was support, could be potentially resistance. Reclaiming 1700 is a big step. That is a big, big step. The weekly chart here still looks very bad. Arguably double bottom, back test of the 200 exponential and simple. If we clear the 200 exponential and simple, it's going to look like a W, double bottom. Holy shit, I actually said it. I actually managed to get that series of words out without fumbling. Congratulations. We did it. So realistically, what I'm looking at is, I don't know what I'm looking at. What was I about to do? Oh, double bottom. So what I'm looking at is the double bottom right here in the measure move would be basically from the double bottom. Now you could do the weekly close. Arguably, you could do the wicks. I will put the conservative move right here, which would be the weekly close. But basically, if we came back up, which it seems likely, to 1690 to retest the 200 exponential and simple, to back test this previous high where we got rejected, the measure move breakout of this W right here would take us back potentially, slightly above the 21, probably likely up here to like 1759. So we're at like 1669 now, $100. That's great, like 6%. I mean, come on. 2 green histograms. Bearish control zone, trying to build back up. I mean, it still looks really bad, but there's a case for it to go up $100. Congratulations. You're like, wow, thanks. On the monthly, looks absolutely terrible. This, trap door waiting to happen. We have a new close. We have a clear indecision candle. We're like 5 days away, and the 821 are accelerating to the downside on the monthly. Just got a hard sell signal. Just got a clear rejection of the blue slope line from underneath, which is exactly the signature that we printed before this disgusting sell-off. Does it have to happen? No, but it's definitely worth being aware that there are potential targets in the 1300s for gold. Silver looks like trash. Definitely looks better. The fact that it broke out, back tested, found support, put in a higher low, that's good. It looks like silver wants to come up here and, potentially fulfill the remainder of this move. 821, flip to the upside. Yeah, I don't think it's crazy to think silver gets like a 10 to 15% bull move right here. The real thing will be the miners. I should have pulled up a couple miner stocks here. But, maybe something like First Majestic or something like that could see some real positive price action. Or, obviously like some of the others as well. I'm just throwing that one out there specifically because it's such a large portion of the silver miner juniors, SILJ. But there's some other stuff in there too, I'm sure. It would have a nice move. If silver moves 10 to 15%, some of these miners could easily see 20 to 50% moves. Matter of fact, I'll post some setups for those in the group as well. So GSG, GSCI commodity index. So we saw a little bit of strength in commodities, a little bit of strength in oil. Overall, nothing really changing right here. We're kind of just hanging around this range. Still just trying to work out where this is going. I don't have a strong bias one way or the other. I would say probably still bullish. Yeah, probably still bullish just because, we're technically holding on to the 200s for now. And it looks like we're back testing the 200 simple and the bottom of this channel right here. If we reclaim this channel, probably headed back to like $24 or something like that. Not really like a big tradable move or anything. Definitely looks like it's trying to roll over here and build some strength back to the upside. So LNG, still looking pretty toppy. We talked about this. Essentially how we just have a series of higher highs, lower highs on the price action. And here it looks like we're rolling over. So triple bearish divergence on, this liquefied natural gas. And exactly what I said happened. Everybody got scared. Europe was in an energy crisis. Everybody was going to freeze and die. Literally everyone. And then it was going to be the end of Europe. And then, Russia was going to take it all over. That was like, quote unquote, priced in. Well, now here we are. We have a mild winter in the United States and Europe. So far, it's still early. We have, everybody filled up their natural gas reserves. Topped them all up at, record high prices. Like the fucking retards they are. And now what's happening? Well, the exact same thing that happened with oil when we went into the COVID lockdown. There was a bunch of tankers full of oil, no demand for oil, nowhere to put them. And what happened? Futures go negative. Is it going to happen again? But this time with, natural gas? I mean, I guess we'll find out really soon, since there's a bunch of big old tankers just sitting off the coast of Europe full of liquefied natural gas that nobody can take. Oh my God, that's so weird. It's so weird. Huh. It's almost like we got lucky again. So we'll see what happens. Probably going to get wrecked. I mean, if we don't, and obviously this is best case scenario, is a mild winter. It doesn't solve the problem. We still go through the same thing again next year. You know, I'm not saying this is a resolution or anything, but let's be real. If you have stuff and there's nowhere to put the stuff, you have to put the stuff on sale. And if that's a futures contract, could it go negative? Yes. If it's, you know, a product in Walmart, you know, does it go down until they sell them off? I mean, they don't even care at that point in time. They literally just want to get the shit out of there. It's taking up valuable space. You know, whether we're talking about LNG or Walmart shelves, either way, same thing. So we'll see what happens, but this is looking like it's ready for another test of the lows. 150, probably the 200s, and continue to play out this broadening wedge. You know, potential topping pattern. We talked about how this could or likely is distribution. Once we broke above this key resistance right here, you know, it came back down, back tested it. Likely we're seeing some distribution take place. We'll see what happens if we do get marked down to these levels and then price action from there. But LNG, go figure. Everybody got on one side of a trade, and now the trade doesn't look so hot. Mosaic looks very similar. Not much we can see here. Arguably still bullish, just a higher low, and you know, still technically trying to reclaim the 200s. Still looks okay for now. The big thing is obviously a lower high right here and higher low. This is more of a neutral pattern with a bullish lean because we had a bullish leg into it. But again, that could, you know, right now there's a battle taking place through a lot of markets between the bears and the bulls. Some of them, the battle is close. Other of them, like, you know, Meta, the battle is won. Meta is dead, stabbed, bleeding to death on the battle floor, you know, and everybody's just kind of walking by, kicking dirt in its face. Nobody cares. You're trash. And you're like, not in the metaverse. We're cool there. Whoa. All right. Uranium on the daily, URNM. Nothing really has changed here. Series of lower highs, series of lower lows. The question is now, are we going to come up here and threaten the highs? Are we going to melt down here and threaten the lows? You guys still know how I feel. Again, been very, very bullish on uranium. Took my profits along the way. Now there's definitely a battle taking place. I'm not sure what's going to happen, but pretty clear lower highs, pretty clear lower lows. I love this one because there's very little confusion in what's taking place. So, you know, when we take out the high or when we take out the low, it's going to be very obvious. The problem is, you know, right now we're right smack in the middle. It's like 82 to the upside or 57 to the downside, and we're at 70. So it's like coin toss at this point in time, technically above the 821. We'll see how the weekly closes. This weekly could look good, cross 821 back to the upside, at which point in time, you know, it would start looking a lot better. CCJ still holding up pretty good overall. What is this? Tomorrow, right? Yeah, so tomorrow we will see. We shall see. Obviously, this thing was selling off pretty heavy. Got the big breakdown based on the announced potential merger/acquisition. Ran up, closed that gap since then. I'm sure none of this has to do with you know, any insider type information or anything like that. So I'm sure there's none of that going on. You know, legal or illegal. People are like, oh, when you say insider information, that's a conspiracy. There's a such thing as legal insider information. You're just not allowed to use that to financially benefit. Doesn't mean people don't do it all the time. So Tilray, so we talked about this trade setup on our last stream right here. We talked about the potential of just longing here or potentially longing the pullback. Obviously came back down exactly to the entry point, overshot it by a couple pennies or whatever. So obviously that long is in full effect now. Since then had a pretty aggressive burst to the upside. Now, could we have picked a better pot stock than Tilray? Yeah, we could have. Some of the other ones surged much, much more. But you know what? It is what it is. Should we have diversified a little bit and just taken a couple of positions? Sure, probably, but I didn't. It is what it is. You know, sometimes I've been busy lately. Sometimes I get a little lazy when there's not a ton going on or not a lot of interest or whatever, like anybody, sometimes I'm much more active trading than others. The truth is, though, I mean, to tell you the truth, this has been a phenomenal year for us. It's been really, really bad for most other people. So at this point in time, I'm just excited to close this year out substantially ahead of our benchmarks and pretty much like the markets or anyone else. So very, very happy with the performance this year. I mean, shit, you could literally have took all your money out around the end of last year or the beginning of this year and then done nothing all year long, and you would look like a goddamn genius. And that's perfectly acceptable. Matter of fact, a couple group members have expressed that feeling as well. I have been scalping a decent amount along the way, but the truth is, as we get towards the end this year, as we get towards rebalancing and everything going into the future, I'm really looking to start redeploying capital back into the markets should they present the opportunity. Because I'm not going to just sit here and stay bearish for 10 years. There is a possibility markets have or are close to bottoming. There is a possibility we go substantially lower. And the market's going to tell us that in real time. So Tilray up a nice percent so far. Obviously, the target here is the 200 exponential and simple, the descending resistance. As long as we have this ascending support holding up, I mean, at this point in time, once something moves 16% in your favor, the fact of the matter is, even if we're still looking for 31%, or in this case, 38% from our entry, I did not get the entry here. It actually came down and I got the lower entry as discussed. But I mean, the fact of the matter is, this likely pushes back up and then rolls over and goes lower. If that doesn't happen, we're going to look like a genius and we got a beautiful entry. But the fact of the matter is, it's likely going to get rejected and roll back over. Once it's up 16%, the stop loss needs to be back at the entry point. There's no reason this should, I mean, because what if we get one of these? It sells straight back off. We lose the 16%. We come back to our entry, and then we potentially end up, what was a winner up 16%, we could have locked in, turns into a loser. No, thank you. So I would rather the 16% stays in play, and then if we come back down to our entry, we get stopped out. And that way it's basically a free trade. Or we close it now up 16%. Who cares? But I do think this still has some legs on it. 8 and 21 bull cross, all green histograms above the slope line, above the zero line, hard buy signal. The knife is kind of funky right here, but it's not like alarming. So yeah, I mean, it looks like probably it's going to get this move. Now, could it top out right here at $4? Could it top out right here at $4.35? Yeah, I think that you really need to be taking profits up around those levels. So Alibaba, also backtest the 886 off of essentially like a double bottom, like the lowest low it ever load. The last like 3 earnings haven't been bad. This was the bottom. This one melted down afterwards. This one just slowly went down. So this is coming up. Man, you got to be just real, real careful in China right now. Real, real careful. But it's definitely worth keeping in the spotlight. I do think, see, that's another thing too. I'm still fairly confident that we're going to see, I mean, the rest of the world depends on China. The world depends on China. As crazy as that sounds. And people are like, what? No, it doesn't. It does. The world depends on China. They consume a lot of shit. They produce a lot of stuff. I mean, they're a big portion of world GDP, population, etc. So as long as China is in rough shape as it is, it's going to be very difficult for the world to recover. And I think people forget, hey, who got us out of the 2008 global financial crisis? That's weird. Oh, what about 2000 when everything caved in and the tech bubble burst? What was the main entity that propelled us out of that? Oh, that's weird. Okay, so I guess China's important. And it doesn't seem like they're going to be in a position where they could just go nuts like they did previously and spend a ton of money to build a bunch of stuff and create a bunch of work and economic activity that has essentially amounted to for nothing. If I build 1,000 houses, that's good, right? Everything's good. We need materials. We need labor. We need financing. It's massive for GDP. But if nobody ever lives in those houses, if they're like eventually become decrepit and then, get demolished because nobody can live in them or nobody can afford them or whatever the situation is, they're not built up to code or whatever, that's absolutely terrible. So that's basically what, China has been doing for the last few years, few decades, is like fake economic growth. Like, a real economy is like, hey, we need more of this. People are willing to pay for it. And it's like, okay. And then somebody steps in and they produce the thing that people want to buy for, a reasonable price. Well, when the governments come in, when the central planners come in, when, we start trying to, help the economy out and we start saying, hey, the economy doesn't know what it's doing. Don't worry. We'll show you. That's, central planning never works. And now we're seeing that play out in China as we speak. So are suddenly they're going to central plan the entire world out of this? Or is somebody else going to step up? I don't know. We'll see. We shall see. It's going to be very difficult for the, entire world to do well while China's got the flu. Like literally and metaphorically. Obviously not like speculating that that's all it is, that it's just a flu. Obviously, I'm not saying that. Clearly, this is an epidemic / pandemic of serious nature. So easy, VT. Okay, so these were just some like random pump and dump type stuff. So yeah, we got the back test of 200 exponential and simple. Pretty aggressive buying came in off of that taking profits. So probably reaction selling followed by reaction buying. I would wait and see what happens with this one. I don't even know if you care anymore. I'm pretty sure you took profits. VVPR. So we talked about this one. It like literally went down to like 40 cents. And then the next day like shot up to like 60 cents. And then all got given back. Trying to build some bullish divergence here. Just remember with these, they're total trash, 1. And 2, the only way that we could see the amount of like selling taking place right here is if people that are on the inside here don't believe in this company anymore. I mean, it's literally, just completely melted down. It's the lowest low it's ever been at. There's nobody left to sell when we get to this level but people that, were early. And then this one really reflects it with the volume we saw take place right here. This was that QNGY. So it had a pretty big pump, gave back most of it, sold off to a new low, pushed all the way up to highs, went from, basically $1 to $2 in a single candle, 100% move during the day, closed back negative, had a new low, pushed back up, trying to push back. Again, look at the massive volume right here. I'll be very, very careful here. I mean, this thing has gone to zero, effectively. It was $200. Now it's $1.40. This is gone to zero. There's no money. There's no productivity. There's no product. There's no even hopes of a product. I'm speculating. I don't know anything about this at all. But let's be real. If a chart looks like that, it's a bankruptcy that hasn't happened yet. And then last for today is the PFIX. So this was that simply interest rate hedge ETF. So obviously that massive gap up right here. And we see rates now kind of rolling over. This is, in my opinion, this is still going to be a massive potential trade. This could come back down to like 65, and that would look like a real big buying opportunity to me, as we would basically just be back testing those previous highs. We've got some key fib levels. Ooh, those are bright. My eyes are burning. Don't look directly at the sun. So what did we get up to? The 1.618 was right here, and then we shot up slightly higher. But that's a 2.618 in blue. So I'm going to get rid of this yellow one and let's focus on this blue one. You guys, I'm sure can see that really well. So if we take from the May 21 price at like 51 bucks, and then we just take it down to the December 21, $37. That gives us the 1.618 fib extension was this double top right here. And then the 2.3, I don't know why I have the 2.382. I was probably looking for it on something. But the 2.618 is basically where this topped out. So again, massive blow off top. Possibility that it comes back down here and retests some of these key levels. Now, how's that going to reflect in actual rates? And do we see that deep of a pullback? And is that a macro top? Maybe. I mean, this looks pretty parabolic, so we're seeing a blow off top in real time, on the daily at least. But I mean, weekly and monthly closes on some of these things that are showing a little bearishness lately really could paint a a bad picture. So the next couple of days are gonna be very, very important. Very, very important. So, all right, think we did it. We made it to the end. Gonna go ahead and wrap it up there. Let me jump over here and see what's up. Paraj says, can we check PayPal and Wayfair if we get a chance? Pretty sure I looked at PayPal and there was like nothing going on. And what's Wayfair? W, right? Mm-mm. Um, yeah, so PayPal has been just absolutely melting down. Obviously, we're able to identify a massive Adam and Eve double top, played out nicely, measure moved down, and it's just been melting down since. We put in a low about $68 in June and have not went lower. Earnings coming up. Last two earnings were a beat. Attempting to backtest at 200 exponential and simple. Yeah, I mean, it really looks like it wants to come up here to like 98 to like 109, somewhere around there. But I mean, there's nothing really here right now, especially with earnings coming up. If I'm not already in a trade, I typically won't enter in ahead of earnings. I mean, unless I have some kind of edge, and I don't really have like a big edge on PayPal. I mean, the truth is with PayPal, I would assume that PayPal is going to do terrible going into the future because all I've heard lately is bad press on PayPal, and it's not done anything. Like if you told me PayPal was going to come out and say they were going to like fine people for saying or doing things they didn't agree with, thousands of dollars. I mean, I personally know like dozens of people that have dropped using PayPal completely and are using like Zelle or some other form of payment processor. I know eBay has dropped PayPal for like 95% of transactions. For me, like I don't see the picture fundamentally for PayPal. Technically, I mean, technically, the bull picture for PayPal would be that the trend is decelerating to the downside. So the 200 exponential, the red one, is above the 200 simple. So the same way that often the 200 simple crosses below in a downtrend or above in an uptrend, and then often marks the top, or not the exhaustion necessarily, but the divergence between momentum and price action. Not crazy to think we put in a new low and then PayPal actually like is trying to carve out a bottom here. The momentum is obviously telling us, hey, there was pretty aggressive selling for a while. Now it's not that aggressive. There's not a ton of buying, but at least we're not going lower. But oftentimes we do see a lower low before the bottom. PayPal is a dangerous one though. For me personally, I wouldn't F with PayPal right now. There's so many other better things you could do. Anybody that's like, when you're potentially going into like a bear market and there's like, or you're in a bear market, or there's a bunch of, crazy stuff happening, land wars, potential nukes, like, food shortages, energy shortages. The last thing I want to do on top of all that is be investing in somebody that's like unpredictable or predictable in a bad way. And if you come out and basically your job as a business is to provide some kind of service or good and to as many people as possible and make as much money as possible. When you start making decisions like, and I'm not saying this is bad by any means. If you want to come out and say, we support Ukraine, fuck Russia, you can say that if you want. But chances are you probably are going to lose some business from it. Now, you might gain some business because other people are like, oh, PayPal supports Ukraine. We love them. Or they hate Russia, so we love them. Well, whatever, that's fine. But you're going to isolate some people one way or the other. So, in my opinion, if you're a business, just do your fucking job. Be the business. Make money. You don't need to come out and tell people, hey, if you use us as a payment processor and you post something on social media that we don't like, it doesn't agree with our woke, trash, fucking views, we're going to charge you? Go fuck yourself. You don't ever have to charge anybody. And then they're like, oh, that was an accident. So somebody accidentally typed up a letter. They just leaned on their keyboard and it just accidentally typed up that they were going to charge people money. steal money from your account if they didn't like what you say? Somebody leaned on the keyboard and accidentally typed up a nice letter and then sent it out? I mean, get the fuck out of here. Are you retarded? So yeah, I mean, PayPal technically doesn't look great. Fundamentally, fuck no. So Wayfair, I mean, this thing's melting down, obviously. New lows, just getting absolutely wrecked. We do have a cycle low down here, a lower low down here from March of 2020. That Rona low was at about $22. We're just off that. I think I got some stuff. Yeah, okay. We drew some stuff and did some things. All right, so that played out nicely, and then full-on meltdown. I haven't traded Wayfair for a while, so I don't remember what we drew that for, but it played out nicely, obviously, in hindsight. Yeah, I mean, pretty brutal. If we go back further and we do like the whole life cycle, fib from low to high, we're basically at the 786. If we go just from that previous swing, we're kind of at like the 886. It's not on this chart, but around that area. But the truth is, there's a little bit of price action here, and this is a pretty strong support at that 786. But if we lose that, this is what we have left. That is not good. Not good. They missed their last 3 earnings in a row. They're about to report on the 3rd of November. Dear God. I mean, they lost. Oh, Jesus. Yeah, dude, I would just be real careful. The revenue is $3 billion. The net income is minus $78 million. That was Q3 of 2021. Q4 2021, revenue $3.2 billion. So it's up a little bit. Net income went from minus 78 to minus 202. So their costs like tripled. Or, well, I shouldn't say that, but you get the point. And then 3.2 in Q1 of 2022 down to 2.9, and the net income went from minus 202 to minus 319. So they're losing money, and they're losing money faster. So they're accelerating. They're basically a machine that destroys wealth. And they're doing it really good. They're getting better at it every day. So the longer you wait, the better they are at destroying wealth of shareholders. So for me, I would say, well, if I'm going to engage in some of this destruction of my wealth, I should probably just wait as long as possible. AKA, don't fucking buy this shit. I mean, look, $3 billion revenue minus $319 million net income. Revenue $3.2 billion. Oh, cool. Net income minus $378 million. So they're like, okay, we lost 78 million, we lost 200 million, we lost 319 million, we lost 378 million. So I'm guessing in a couple of days they're going to tell us they lost 435 million. That's my guess. I mean, fucking disgusting. God. And I mean, the estimates were already like brutal. And then they were like, let's exceed everyone's expectations by doing a particularly shitty job. So actual was 194, estimate was 190. That actually wasn't that bad, the Q2 2022. But their estimate here is minus 209. So actually this, I mean, it seems like pretty in line with probably what's going to happen. They're like, we've been losing money. We've been losing money faster. And we're getting ready to lose the most money the fastest ever. That's what they're saying. So they're either going to do even worse than that, or they'll do better than that. But either way, they're telling us they suck. And just one more thing, just a overall type of thing that for me is like a massive red flag. That's like, hey, this is important and kind of a big fucking deal. When I look at a company and I say, how did their asset, debt to asset ratio look? AKA like their total assets compare to their total liabilities. If they just had to like liquidate everything and just pay their bills. Well, Q1 2021, it was 4.68 billion in assets. Total liabilities was 6.2 billion. So debt to asset ratio 132%. So they have more debt than assets. So if they declare bankruptcy right now, they can't even pay back. I mean, this is not fucking good. I mean, it just gets worse. It gets worse. I mean, it went to 144 in Q1 of 2022, 144%. And now it's 152. They have 4 billion in assets, 4.1 billion, and total liabilities is 6.2 billion. I mean, that's disgusting. That's disgusting. I mean, they're fucking burning cash, which is okay as long as they got a bunch of cash on their books to burn and nobody minds. Sure, go ahead, keep destroying. Congratulations, one more quarter goes by, and this quarter you were able to likely destroy $400 million. Congratulations, Wayfair. So is this a pretty good price for Wayfair? I would say it probably should be, I mean, the lowest it's ever gone. This probably should go to zero. God damn. And you're like, but it's like the next Amazon. Well, maybe, man. Everything can't be the next Amazon. And I think that's becoming clear. Yeah, I would be real careful with this. I wouldn't touch this with 10-foot pole. Honestly, not right now. I mean, there could be potential for a scalp in there, I guess, somewhere. But, I mean, this thing just looks like this is a meltdown in process. God damn. It's terrible. So, yeah, I guess we'll go ahead and wrap it up there. Oh, yeah, for sure, brother. Definitely. Yeah, wealth destruction at a max, man. Nobody does it like they do. So if you were like, I'm investing in one or the other, okay, I don't care what you say. I would say PayPal is the way I would go over Wayfair. But, only based on fundamentals, technicals, and, the future potential of this company to actually turn a profit. Especially, if you're not turning a profit at 0 rates, how the fuck are you going to turn a profit at 4 or 5 or 7? You're not. You won't. You'll go out of business. So that being said, yeah, I'm going to go ahead and wrap it up there. Hopefully everybody enjoyed the stream right at the 2-hour mark. Thank you all for tuning in. As always, this was our Wednesday midweek market update. We'll be live again on Friday morning, 11 a.m. Eastern Standard Time for our morning market wrap-up. And a lot of cool stuff happening here. We'll see. There's definitely some potential for some big moves in the coming future. Definitely keep my eye on pot stocks for some continuation. The potential for some mining stocks, including silver. I've been waiting for that trade all damn day. So maybe, or all damn year more like. So maybe that's going to be creeping on here soon. So be real careful, specifically with these tech stocks and these big misses. No surprise here, obviously. And we know that these big tech stocks are massive portion of the indices and the overall market. So if we see a big, Meta's bad, obviously, they're big. But if we see a, 10 or 20% gap down in something like Apple or, Amazon, that will wreck the markets. That will wreck the markets. We can kind of get away with it when it's Meta or Snapchat or something like that. But, yeah, we'll see. We'll see what happens. Tesla's another one that could really, if it decides to take a leg down, and it's not like it's not down already. It's down like 50% off its highs. But if it decides to take another leg down, it's a big portion of these major indices. And then also, cult portfolios makes up 100% in many cases. So yeah, that's it. We can go ahead and wrap it up there. It is 9:57 p.m. Eastern Standard Time on Wednesday, 10/26/2022. And I'll see you guys before Halloween, so don't worry about that. Yes, we'll go ahead and wrap it up there. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Appreciate everybody tuning in today. Questions, comments, all that good stuff. But yeah, that's it. I'm out of here. Everybody have a great night, and I'll see you guys on Friday. Crypto Trend Trader